Hey everyone, and welcome to the PivotBoss Closing Report for March 10th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the recent session here. This morning, we talked about actually last evening, what we were looking for was a potential squeeze beyond the previous week's close price. And price did just that in overnight trading, but rallied into the previous week's high here, basically 1998 quarter on the new front June contract. And rallied into 2000, the even number there, and basically saw significant rejection. That rejection right there led to a move down into the previous month's high of 1959.5, and I mentioned any push into that area could be a short-term buying opportunity for an attempt at squeezing higher. And price did drop into that zone. We did see a push back up, and ultimately price closed right at the center of its range. So you have a very indecisive pattern here after the higher high rejection. So this is kind of an iffy point here for the markets. You have bears defending off the previous week's high and at that 2,000 round number. You have bulls defending off the previous month's high. And right now you have opposing forces keeping price within this little tiny range right here after the recent squeeze. I talked about before, short term, given the current bullish trend, and given also how price pushed beyond the midpoint of the August range here, this is 1941s now, any push even as low as this zone could offer another buying opportunity for a continuation higher. But first things first, if prices are being rejected above 2,000, then that could lead to more of a pullback ahead, and that could bring us down into the HVN below at 1912.5. So we have a couple of ideas here, but overall we have a very tightly coiled range. It's hard to tell either way. Given the existing push here to the upside, given how prices has pushed through that recent resistance level, short term the expectation is for more strength ahead. But given that rejection here, things could get iffy. I've also talked about the higher time frame rounded top pattern that we've seen here build out in the market, kind of a higher time frame pattern here. We've finally come into the right side of that pattern, which is just under previous support. That's a very, very important level now. And if prices can't get beyond this level, this is a very ominous longer-term pattern here, which could lead to a push back towards support at 1800 for a major, major test. Any failure to hold that 1800 could open the door to much, much more weakness ahead. So this is going to be an important pattern to continue to keep an eye on. I don't believe that right now is, in essence, the time it's going to drop. We could see more back and forth action around this 2,000 before an ultimate move is declared either way. But right now you can see how the market is trading on both sides of this range right now, and eventually expansion from this range will spark the next near-term move. So short term, we're watching the previous month's high, 1959.5. Failure to hold that level opens up a move into 1912.5. Looking at the previous week's key levels, bears are defending 1998s. Above this level squeezes into the next upside HVN, which is 2061. All right, taking a look at the intraday time frame here, you can kind of see how that played out this morning. A big push into that high up there. This is the 25% monthly expansion level. Hit it right on the button and dropped into the previous month's high. That's exactly what you would expect. Bulls came in and defended and returned price back to the previous session's close here. That's going to be an important level to watch. So right now we kind of have our edges of the range. Expect bulls to continue to defend this support zone. Expect bears to continue to defend this area, and we could see further back and forth action until expansion from this range occurs. All right, let's take a look at crude oil. Here's crude oil. We finally got a day that was rather quiet here, an inside day pattern. You can see that prices have been, up and then back and then up and then kind of back again. But overall, this thing continues to be bullish short term. I mentioned before the recent strength here implies that pullbacks, even as deep as this 34.63, could offer an opportunity to defend for a continuation into 40.50. So right now, that's still on track. And I would say that 37s here, still an important key level, along with 36s. A couple LVNs here on the composite profile. This is a zone here. Each of these levels are zones where bulls are looking to defend for a continuation higher. I also talked about the fact that price went bid off of an HVN here, composite BPOC, and that could imply a move into the recent empty VPOC from this prior range here, which is 39.17. So the expectation is if bulls can continue to hold above 37s, you can see a continuation into the primary weekly bull target at 39.35, followed by a continuation into 40.50. Failure to hold 37s opens up a big time test of 36s with a shot at rotating all the way back down into the 33.44s. Looking at the intraday time frame for crude oil right now, you can see how prices have played off the weekly key levels here. So we have the previous week's high and close about right here. You can see how prices went bid off that level and rallied into the 50% PivotBoss expansion level. From there, a rejection led us all the way back, and then this was defended for a move all the way back up. That led to a move into the 25% key level, which was defended. So you can see how this thing has been trading well off of these levels. So continue to watch those levels as a guideline here. Again, pullbacks into 3700 could offer 37s rather could offer an opportunity to buy for a continued squeeze. Failure to hold that level opens up a big retest at 36.28, followed by a potential to see expansion from that range. Right now, we have a very clear range to trade from. Expect market participants to fade the edges of the range until expansion occurs. All right, taking a look at gold. What a huge squeeze we saw in gold here. This was something that we were cautious about. Obviously, when we had the fade away from the 1272 levels here. The 1272, we were looking for a continuation into 1233s, and we got within 4 points of that target, and then basically dropping about 35 handles in our favor, coming within 4 handles of that target. And then, I mentioned though, given the uptrending market, you have to be able to take profits quickly, because if you're trading counter trend moves in an uptrending market here, you've got to take the quick move, because the squeeze can come very, very quickly. In this case, we saw an outside buy setup occur. That's where you have the low below the previous low and a close above the previous high. That's an outside buy reversal setup right there. Very, very bullish setup. I would say in the upcoming session here, any pullbacks perhaps into 1263.90, maybe even as low as 1255.90s. A pullback could be a defense zone here for a shot continuing higher into our 1300.1 upside target. So right now, given the current slingshot move we saw, the outside reversal, any pullbacks in overnight trading to any of these key levels here could be an opportunity to defend for a further squeeze into 1300.1. All right, taking a look at the NQ now. Here's the NQ, very similar to the ES. We had kind of an indecision bar here where we have the early highs easily rejected down to the lows. The LVN here defended on the way back up and closed right around the center of that range here. We have 43.45 as a key LVN to watch. Above that LVN squeezes into 44.49 and 45.06 half. So we have some key targets above to play toward. Any failure to get above 43.55 puts pressure on the downside. And this has been a rather volatile range here. Not a whole lot of action either way. No real decision. So this one's a little bit difficult to play right now. You have to be very careful, because we're getting a lot of back and forth action. Not a lot of true great rejections either way, at least over the last few weeks. But I would say above 43.55 opens up a clear path to the upside, which could be very significant. Any rejection of prices above 43.55 could be a quick sell opportunity for a move in the opposite direction. So right now, no real clear move other than we're trading in this larger range here. Very big indecision day here with moves on both sides of the range. 43.55 is the most important and clear key level to watch as of right now. Now, looking at the intraday time frame for the NQ, you can kind of see here how the early highs here punctuated and led to a big time sell-off. Price then bounced off the lows and rallied back toward the midpoint. So right now, you can see how this thing has played out over the recent weeks here. Over the recent week, basically just a clear zone on top. Again, 43.55, very important. But other than that, it's just very volatile. You got to be careful here, as the prices could see more volatility before direction shakes out. All right, that's it for now. Let's see how this thing plays out heading into Friday's trading. Good luck and trade well.